In this video, I will show you how to analyze a cash flow statement in 10 minutes. Let's start the timer right now. In case you don't know me, my name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 24% per year. And analyzing free cash flow is the most difficult part of analyzing the financial statements. I have Pool Corp here as an example. I'm in the annual report for 2023. Balance sheet is easy. Income statement is easy. Now we'll attack the most complex document in this income statement, in this annual report. Okay, let's start. You clicked on this video for this reason. You start from the cash flow statement. You have three parts: operating activities, also called cash flow from operations. You have here investing activities, cash flow from investing operations, and financing activities, cash flow from financing activities. These are three subsections of inflows and outflows of cash. So how is a cash flow document, cash flow statement produced? You start with net income that you just had with your income statement, and you adjust for some numbers. For example, you add back depreciation and amortization. You add back to net income because these are artificial costs. D&A, depreciation and amortization, that's pure accounting. These are not cash events. This is pure accounting. The cash has not moved in the company, did not go anywhere. So you have to add it back to the net income. After this, you do another adjustment, which is the SBC, share-based compensation. Same thing as you share-based compensation. In case you don't know what that means, that's free salary, free stock options that the management gives to salaries, insiders. So you just gave them a form of salary. You gave them stock options, free shares, but it wasn't a cost. It wasn't cash. So it's added back to these cash flow from operating activities. Some people don't include it back. Some people do, but most companies include it back in the cash flow statement. Okay, and then you do some adjustments here and there. These are minimal. This will not move the needle in the big net income. You have some provisions here and there, accounts that move in the cash flow statement, in the balance sheet, sorry. And you have here this section, which is quite important. That's the working capital. In this section, you have what moved in terms of cash management in the short term. What is short term in our balance sheet? If you remember, I did a video about this. The inventory management is short term. The receivables, payables, short term. So you have some inflows of receivables here. That's plus. That's a plus, so you have to add it back. You have product inventories. That's a cash inflow. What does it mean? If that's a plus, if inventory is a plus, that means it's a plus. It's an inflow, cash inflow. That means you sold a lot of inventory that generated some cash. So if it's in positive, it's a plus. That means you have sold your inventory. And you can check this very easily, because in the balance sheet, the inventory should be reduced by this amount. So, I don't know. Let's check the inventory here. Inventory here. Yeah, this amount. In 2022, the inventory was 1.6 billion. And in 2023, it was 1.3, 1.4 billion. So, decrease in inventory because, yeah, you have sold $200,000 to $200 million of inventories. Same thing for the payables, receivables, that can change. Okay, that gets you the net income from operating activities. That's the cash flow, net cash provided by operating activities. That's the cash flow generated by the core activities of the business. Okay, now you have the investing activities. That's M&A. the merger acquisition. That's in this line. Acquisition of business, net of cash acquired. You see some small acquisitions, and in 2021, Pool Corp did a huge acquisition. Pinch a penny. Yeah, it was a big acquisition at the time. Here you have purchases of property and equipment. That's the capex, so capital expenditure to either have a maintenance of your, I don't know, warehouses, your new facilities, or growth capex to build new facilities in Mexico, to build new facilities in Thailand. That could be totally possible. That's in this line. And then that's minimal. So you have your net cash used in investing activities. That's negative, negative, negative. Yeah, you have invested in either acquisitions or capex. And now we are talking about financing activities. There are a lot of lines, but actually that's quite simple. In the financing activities, you have the debt management. If you take more debt or if you pay off debt, you have the dividends, you have the buybacks. So here, proceeds from the financing facility, short-term borrowings, all of this, pure debt. So that's a minus. That means you paid the debt. And that's a plus. I mean, you took some debt. So there is debt management. Here, contingent consideration, that's minimal. That doesn't impact anything. Stock issued under the SBC. Here. Cash dividends. So the dividends payment are here. That's the buybacks, the repurchase of common stocks. That's a minus because you have used some of your cash in your balance sheet to repurchase your own shares. So that's a negative. That costs you some money. And at the end, you have net cash from financing activities, negative, negative, and here it was positive. Okay, so you do the sum of all these three categories and you have the change in cash. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. Okay, so maybe that's started to get clearer in your mind. I will use another example with Monster Beverage. I have only 3 minutes, so we'll get much faster. Again, for Monster Beverage, it's a simple company that sells energy drink. You have three categories: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Here in the cash flow from operating activities, you start with the net income. You do some adjustments, depreciation, amortization, the expenses, stock-based compensation. Here you add it back, and then you have short-term elements, short-term payables, inventories. So you adjust for anything, all the cash inflows, outflows. That gets you the net cash provided by operating activities. And then you have the category called cash flow from investing activities. So that's some M&A or some capex, some acquisitions. Here they give you more details. Sometimes companies give you really detailed information about acquisitions. You have the exact amount paid to this acquisition, and that gets you the net cash used by investing activities. And finally, cash flow from financing activities. So payments, that's negative in the bracket. So payments on debt, they paid this in debt. Issuance of common stocks here. So they issued more stocks to get more capital from public markets. That's a cash inflow, that's in positive. And purchases of common stocks held in treasury. That's buybacks. So at the same time, they diluted a little bit, but they did buybacks. I suppose they did some dilution for their acquisitions or either SBC, and they bought back this amount plus an additional amount of buybacks. So more buybacks than dilution. So at the end of the day, lower number of shares, and you get net cash used for financing activities. You do the sum of these three subsections, and that gives you the total number of cash that has been moved with the companies. So now, what is important from this cash flow statement is how to calculate the free cash flow of a company. There was no line free cash flow. The free cash flow is really, really simple. And I will end the video with that. You take the net cash provided by operating activities minus the capex, minus the purchase property seeds, this one. So that's 888 minus 60. And for Monster Beverage, you have here this line, operating activities, minus the capex. Where is the capex? Purchase of property, plant, equipment, this one. That gets you the free cash flow. And that's how you analyze a company's cash flow statement under 10 minutes. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.